Okay, I'm going to do my weekly review. And before I do my weekly review, I want to say one thing. What a week. We had an crazy volatile week. Uh, the last time, I guess, back in 2020 during the pandemic, it was volatile like this. I wasn't day trading. I was just doing the simple buy and hold stuff back then. So I have never traded the market. I didn't start really actively day trading until 2022, early 2022. I would sell uh, calls and stuff like that, but no real trading. So this for me was interesting as far as the volatility on the day. But anyway, let's start. We're going to start with S&P, ES. What can I say? We went down. We went down. This week is a huge, huge red candle. The weekly is at the 30 RSI. Maybe we'll have a bounce from that. Perhaps maybe it'll stop some of the bleeding. But then who knows? Trump may say something to make himself look good that he's done something great and change something, and the market will pop back up. Who knows? Right now, this is the situation. This big red candle right here. We at the 30 RSI on a weekly. Let's see. We got there in 2022 during the bear market. We got just a touch below it during the pandemic. And let's see, when was the last time we held under? And the other time would be the Great Recession. We got below the 30 RSI on the weekly and we held under there for a while. So in 2022, we bounced off of it. The pandemic, we had we got below it, but we had a V-shaped recovery and bounced right back. And then since before the pandemic, it was the Great Recession. We can see this in 2008. This is pretty important area right here to see if we're gonna hold under this 30 RSI on the weekly. My next level is this area here, which had been previous resistance, hoping that it'll be support. And it's almost along the lines, almost aligning up with the 200-day moving average on the weekly, which again, it's one of those times when we rarely stay under the weekly's 200-day moving average. As soon as we got there during the 2022 bear market, you can see there's a wick here. We got right above it immediately. It took us a little bit longer to get out of it this time, get above it this time. We wicked the first week. This week we got below it and we wicked up. Then we came back down. Another week, got a little bit below we got below the 30 RSI on the weekly. And then the rest of the weeks were, we were just going up and staying above the 200. And then in the crash of 2018, another Trump crash, we got to the 200, wicked, and came back up. And then the next one was the Great Recession. We stayed under it for a while. I mean, we lived under the 200-day moving average for a long time during the Great Recession. It's not something anyone wants to see. We don't want to get back to there. But so if it does hit the 200, it'd be interesting. I wouldn't say we won't. It could possibly bounce off of this 30 RSI. But that's the importance of those levels. When you look back historically, they were very kind of monumental moments when this happened. It was the pandemic, and obviously that was the bear market. So, I mean, are we in one of those moments? I don't know. Okay, let's go to the daily. Not much difference. We went down. Yeah, this area here, we didn't even think about it. We just dropped right down under it. So we shall see. let's see. Let's go to the NASDAQ. See what's going on there. Go to the weekly. All right, we're at the 30 RSI on the weekly. The same level I've got pretty much drawn up for ES is what I have drawn for NQ, which is a little bit above the 200-day. And it's pretty much the same with ES. I mean, the last time we got and held below the 200 was the bear market 2022. We didn't even get under it during the pandemic. We stayed above it during the pandemic. 2018 crash, 2008, we didn't even get to it on the NASDAQ. I'm thinking the Great Recession was the last time we got underneath the 200-day moving average on the weekly on the NASDAQ was the Great Recession. We haven't really lived under the 200. We did a little bit during the bear market of 2022, but that's pretty strong support, and it's usually considered a good buy area. I mean, a great buy area, because usually, with some exceptions, usually your downside isn't quite as much if we get to the 200-day moving average. Historically, if you buy here, there's not as much downside. So we'll see what happens. Don't want to jump to any conclusions, but that's where we are. And the daily is pretty much the same. Yeah, we're well under the 30 on the daily, of course. Just wondering if we're going to get here and see what happens. Okay, so yeah, as far as long-term stocks, and I haven't been buying anything yet. I bought some on the way down. Like, once we got under the 200 on the daily, I started buying on the way down. But then once we started going up, I stopped, and I haven't bought anything yet until I'm going to see if we can try to start coming up a little bit. But if we do hit that weekly 200-day moving average, I'm definitely just going to DCA every 2 weeks or whatever. Just buy something every 2 weeks. Good stocks, not high-quality stocks that make a pretty nice profit. Let's see. All right, now gold. Gold it's not quite as bad. We had a nice run up with gold, so even if we dropped some, it was no big deal. Yeah, we'll get to the 5 EMA on the weekly quite a bit and come right off of it. Last week we didn't even touch the 5 EMA on the weekly. We came down from all-time highs, but we haven't even gotten to the 5 EMA on a weekly. We're not even at the 50 RSI. We're like at almost like 70 RSI on the weekly. So we're still good with gold. And a lot of people consider gold a safe haven when the market's crashing. So, but we still have a few red days, as you can see right here. Gold reached all-time highs. And then after the Liberation Day thingy, we went down. We got close to the 20-day, and then we came up to the 5-day moving average, and we just consolidated right here. I watched that day, and we just consolidated right here. We didn't really, the bulls were trying to pull it up, and the bears were trying to pull it back down. So obviously, this next day shows that the bears won. The bears won that. We came back down. We got below the 20-day moving average on the daily, and then we came up to wick and closed right above it. So that's where we are with gold. We've been still running. We're still bullish with gold, even though it had a pullback to the 20, which is not unusual for gold or any stock or equity. We couldn't even close under it. But we'll see. In a few hours, the futures markets will be open and see what happens. And crude did something exciting, very exciting this week. All right. For anyone that was betting that we would break this, and then the candle formation, what we have formed was bearish. It was a wedge where we were constantly making lower highs, and equal lows. We had this as support right here for years. We had this as support. We broke that substantially this week. We closed below the prior lows. The prior lows that got under this level, this and this, we closed beneath that, which to me is bearish. I mean, we could very easily just go back up. Who knows? But it's pretty bearish momentum on crude. And I was watching somebody talk about crude, and they think we're going to get to this 40 something level. This was the pandemic when we got down to under $10 a barrel. Then we got here to this 40 something bucks a barrel. And he was suggesting that that's what we're probably going to go to. That's the next resistance level that can become support. Because other than that, this has just been support the whole time. And which actually coincides with this as well. There's been no other support but this. After you pass this level, there's just this. So there's a possibility that we can go to this like 45 level, dollar per barrel level. Who knows? I really don't trade crude. I don't really like it that much. I'll day trade it every once in a while. But let's go to the daily. So crude was interesting. It was an interesting week to me. The volatility was crazy. I did have a losing day, which was okay because I hadn't had one in a while. Yeah. So anyone that had been holding this, thinking it was going to go short forever, was probably pretty happy about this. So that's crude. And that's it. The only other thing I'm going to go ahead on and bring up is live cattle. I was watching live cattle. I thought it was very interesting. On Friday, live cattle hit limit down. Limit down in the futures markets, different markets have where if it gets this low, they stop trading. So live cattle, I believe live cattle and lean hogs actually hit limit down on Friday. We had these 2 gap down candles. You got one here, huge gap down, and this huge gap down, because these markets, live cattle and lean hogs, they close early, and they have more than just the hour close. They're closed for a while, so they can have big gaps. So on the daily, we got under and closed under the 50-day moving average. And so this is interesting to me because there's this level here that had been resistance for a while. And if it can come back down, it was resistance. It was actually support right here before. So the thing is that if we come here, then it'll also coincide with the 200-day moving average on the daily. So that'll be interesting to watch. I may actually start trading live cattle if it can get down here. I may start watching it or something like that. I'm trying to be more patient. So with cattle, I would have to be patient and wait and see. So I don't know. It's just been interesting to me, the live cattle. I don't do lean hogs because the chart isn't as nice and neat. But the live cattle chart is really nice and neat. And it's very tradable. It's just slow. So we'll see what live cattle does. Other than that, the market's been going down. Hopefully things change. Everyone's 401k is taking a hit. If you're getting ready to retire, it's kind of frustrating moment, kind of scary moment. Good thing I'm not ready to retire right now. But it's just an opportunity to buy really good stocks. Just be patient and distribute the money to buy the stocks, kind of try to make them even buys. Historically, it's shown that when you buy during these moments, you end up making a crap load of money once everything recovers. Sometimes it takes a little longer, like the bear market. It took not the bear market, but the I don't have it here, but the Great Recession. It took a while for us to come back. So I don't want to jump to any conclusions and start doing gloom and doom. Right now, we're just looking at the charts, examining the charts, trying to make money off the charts. I was able to actually make money during those days where we were so volatile by just getting in and out. And it wasn't smart. But I should have traded micros, and I'm gonna do it this week if we're still volatile. But yeah, it was an interesting week. And that's it. Bye bye.